introduction.
Hello everyone, and thank you for joining today's webinar where we will give you an in-depth guide through the German investment journey. My name is Owen Carroll and I'm IP Global's investment manager. Today I'm joined by Mr. Paul Cure, Senior Client Services Manager at IP Global, who has been working at IP Global for over 13 years and in that time has personally guided or overseen more than 300 clients through their investment journey. Paul has also invested in Germany himself over the years and is therefore very much an expert on the topic. Also joining us today is Mr. Volker Mauch, attorney and founding member of VPMK Legal Services. Volker is registered and active as an attorney in Berlin since 1998 and is also head of the VPMK Real Estate Department since 2008. Volker has guided more than 1,000 individual real estate investors through their acquisition process thus far. Thank you both for joining us today.
Thank you.
Okay, so today just a quick summary of what we're going to look over. Firstly, Paul is going to take us through the client services team here at IP Global and how they will guide you through every step of your investment journey. Secondly, Volker will come in from more of a legal perspective, where we'll touch on points such as the cost of purchasing German real estate, the timeline of investing in German real estate, and also the legal support that you will get both throughout the purchase process and beyond. And finally, we will look at the taxes that you will incur and that you must be aware of when investing in German real estate. And finally, at the end, we will answer some of your questions that you have already sent through to us. Okay, so next I'm going to hand over to Paul Cure, who's going to take you through your purchase process from IP Global's client services side.
Thanks, Owen. Okay, so I'm Paul Cure, and as Owen explained, I've been at IP Global for around 13 years now, heading up the Hong Kong client services team. The part of the process where we come in is a point of sale, and in order to get to that point, you'll need to provide your IP Global consultant with various documents. Unit application form, which is a reservation form, a fee, passport copy, and a terms of business if you're a new client to IP Global. At that point, we'll start making introductions. We'll introduce you to Volker and his team in Berlin, also to the notary, and Volker will explain the role exactly of the notary during his presentation, and we'll also send your reservation form on to the developer at that point. Within 24 hours of you providing those documents to IP Global, we will then send a welcome letter or email to you, setting out the next steps. And at the appropriate time, we'll introduce you to Liquid Expat, who are IP Global's sister company who can help you with a mortgage, should you need one, and also to Complete, another sister company of ours, and they'll help you with tenant acquisition, lettings and management. From that point through to completion, we will provide you with construction updates, which we will obtain from the developer around every 3 months. We'll give you advance notice of the upcoming payments, which again, Volker will expand on during his presentation, and they will help you through the completion process in due course.
Okay, great. Thanks very much for that, Paul. Now, Volker, we will hand over to you.
All right, thank you very much, Owen. So VPMK Attorneys, we are a law firm that was founded in Berlin about 22 years ago, and we have the specialization that we work almost only with private individual clients from abroad. So our main focuses are on individual private clients and not so much on international companies. We have two main businesses, field areas of business. That is one, the real estate, and the other one is migration, and then in between is company foundations for either of the two. We work a lot with IPG clients because we have, they are international clients who invest in Germany, so that just meets that specialization I described before. If you can go to the next slide, Owen, I'll start talking a little bit about one aspect that is usually new for international investors, and that is the side costs of purchasing real estate in Germany. The side costs are usually a bit higher than what you're used to, which is mainly because of the purchase tax, which is comparatively high in Berlin and in Frankfurt, for example. It's a bit lower in other parts of Germany. It's a regional tax, that's why we have these differences. So in Berlin, it's 6% on the purchase price for purchase tax, and in Leipzig, for example, it's 3.5. Also in Bavaria, it's 3.5. Frankfurt is also 6%. That tax is due upon the notarization plus the 4 to 6 weeks that it takes the tax authorities to process it actually. Then another expense that you have when you buy real estate in Germany is the notary and land register fees. These are degressive, so it's approximately 1.5%, but the more you invest, the smaller the percentage for these. And then we have the legal fees, which is 1% plus the VAT, so 1% plus 19% on top of that, so 1.19. We ask our clients to deposit 50% of that when they hire us and another 50% before we notarize the contract. In general, the time schedule for an investment in real estate in Germany, we divide that into three phases. You see that with the 3 points on this slide here. The first one is the preparation for the actual purchase contract. That is, of course, the reservation that Paul just described. Then we have the legal preparation. That means that from our side, you get a full legal due diligence. And of course, we explain the contract because you are new to that kind of contract. We will, of course, find out whether there are any unusual risks or so and point them out and negotiate them for you. At the same time, most of our clients are sorting out their financing. That means that they get in contact with the finance broker that Paul just mentioned. And when you are happy to proceed, that means when you're happy with the contract, when you are fine with the financing, then we make a notary appointment for which usually the parties have to come to Germany, which of course is not really useful for you because you live abroad. So we represent you at that notary meeting. And to be able to represent you, we need a power of attorney, which has to fulfill certain requirements as well. That means it has to be signed at a German embassy or consulate. There are a few alternatives to that, but this is the most common way how it is signed in the proper form. Of course, again, we will guide you completely through that process. We will provide you the forms. We'll get you in contact with the embassy and consulate. And if there are any issues coming up, we will help you solve those. So let's say we have all this together. The notary appointment happens. We represent you at the notary appointment, and then actually starts phase 2, the implementation of the contract. The implementation of the contract takes basically the whole building period. So depending on at what time of the building period you enter the contract, that much time is left for the implementation. So if you start at the beginning of a project, it's usually 1.5 to 2 years. If you get in later, then it's less. During that process, that is something that we still completely accompany your purchase. That means that we are there with all the questions that you have. So you're not just getting the legal due diligence here, we are really guiding you through the process, because in our experience, that is actually for a foreigner the most difficult part. In practice, that looks that there are first securities registered in the land register for you. And when this is done, then the developer asks for payment along the construction period. That means he completes a certain part and then he asks for a certain payment. We will check that the securities are in place. We will check that the construction period is at least proven the way it has to be. And then we will tell you to make that payment. If you have a financing institution, we will completely have the contact with those and ask them to pay when the individual payment is due. So that goes until the point where the apartment is actually ready to be handed over, until it's completed. There, of course, there has to be someone to check that the apartment is really there and free of defects. We'll organize that for you with a building expert. So we are the legal experts, someone who knows the technical side will do the technical inspection, and we organize that for you. And if there are any defects, which usually there are a few, we make sure that they are being rectified. At that point, usually there is also the last installment due, so the full payment. And against this full payment, you usually get the keys for the apartment. At that point, then usually if you don't want to use the apartment yourself, then you have an administrator. That is also a recommendation from IP Global usually, and we will make sure that they are properly instructed to be able to rent out your apartment and achieve a yield for you. The registration of the full ownership happens afterwards at the same time. And then actually you usually don't have to do very much for a couple of years. And then after 10 years, you may want to sell it again and use the tax benefit that Germany offers there. And then we will do the same procedure again. But of course, on the side of you can just ask us to represent you in the sale as well. I think that's pretty much the procedure. I described a bit what we're doing already in the slide before, but here's again the description of what we are doing. That's on the left side in these green diamonds, and on the right side, that's basically everything that you need to do. So the step one and step two actually belong together. That's what happens before the notary appointment. So one is about the power of attorney and the mortgage, and the second part is about the due diligence, the real contract side. Actually, all that we need from you is that you provide your personal mortgage doc. So for the property itself, the mortgage documentation, we have that and we can forward that to the mortgage broker. But of course, your personal documentation you have to send yourself. And then we will need you to sign the power of attorney at the consulate or notary. Regarding the due diligence and the contract side, all we need is that you read our emails. There's a 3-4 page longer email, but everything else is pretty short and easy to understand. And then we need your reply to tell us to go ahead. The third step, the implementation, there's actually also just replying to emails. And then at the end, you will have to tell us whether you want to use the apartment for yourself or whether you want to rent it out through one of the administrations. So basically, I think there's very little for you to do, and you can see there's quite a complete service that you're getting here. If you can go to the next slide, Owen, then I will talk a little bit about the taxes, because that works a bit different than what you're probably used to. Sometimes only the terms are different, but we basically have 5 taxes that we should look at. We have different slides for individual ones, so if you go to the next one, I'll start with the property acquisition tax and the property tax. So the property acquisition tax, that's what I was talking about before when I talked about the side costs. It's a one-time tax, usually paid by the buyer, and it is different depending on where the property is located. It's 6% in Berlin and also in Frankfurt area. It's 3.5 in Leipzig, also in Bavaria, and the other parts of Germany are pretty much between these two. Only Brandenburg is a bit higher. Due upon the sales transaction, that's pretty much it. There's not much more to say. The property tax, you can compare that to the city tax or council tax. It's also a local tax. It's not really a cost factor if you have rented out the apartment, because you can transfer this tax to the tenant as a side cost. So for most owners, it doesn't really matter. It also doesn't matter so much because it's quite low compared to, for example, the US. In Germany, you have about 250 euros per year for a 1-bedroom apartment. So that is not really a huge factor. And as I said, you can transfer it. There's a new codification right now going, being prepared. They have said they do not want to increase the overall income from this tax. It's a bit unclear who exactly is going to pay less and who's exactly going to pay more. But considering that you can transfer it to the tenant, it won't make a big difference for you. So the next slide is about, if you can show that, Owen, is about the taxes on the rental income. So we do have taxes on the rental income. That means it's treated like other income as well. you do not have, that's a misinformation, sometimes you do not have a free amount of this income unless you have your main residence in Germany. But what brings this income down considerably is that you have a depreciation of 2% of the building value, and you can deduct the mortgage interest. So I've made a little calculation on the right-hand side to make that a bit more clear. With an apartment here for a bit over 500,000 euros and a 54% mortgage, so 291,000 loan. That if you rent that out at 26 euros per square meter per month, this has a yearly rental income of 19,680 euros, and the interest for the loan is 7,275. So you deduct that, then of course you can deduct some other expenses, like for example, maybe your tax advisor, maybe your administration fee, other expenses that you have in relation to that property. I took here 1.5 euros per square meter, and that times 12. Then you have, and that's the biggest part, the depreciation. So 2% of 85% of the total investment, because you only depreciate, you only write off the building, you don't write off the plot, and that's usually somewhere between 15 and 20% of the investment is for the plot. So 85% is for the building, and of these 85% you write off 2% per year, and that brings your taxable income down by 9,160 euros every year, and then you end up with a taxable profit of only 2,114 euros. So you had a rental income of 19,687. Taxable of that is 2,114, and then you have a progressive tax rate, which for these 2,100 would be 340 euros. So we're looking at quite affordable rental income, unless of course you have a very high income, which then again is good in a different way. Another one, the taxes on the sales profit. In the UK, that is called capital gains tax. In Germany, it's also going under the headline of income tax. Again, the same progressive tax rates, but there are some really interesting tax advantages for investors, private real estate investors. That means one of them is that if you have the apartment for 10 years, you can sell it without paying any taxes on the profit. Just as simple as that. You can rent it out before. There's no restriction to what you do with it before. You can also sell it to whomever you want. You make a profit, and that is tax-free. If you live in the apartment or use it for yourself, you don't even have to wait those 10 years. Then it's a shorter period. You can contact me. It's a bit more complicated, but it's considerably shorter if that's an option for you. That is the tax exemption for owner-occupiers. Then the inheritance or gift tax. We do have an inheritance or gift tax in Germany. Usually Germany has quite high allowances for close relatives, which are tax exempted. It's a little bit a complicated calculation, so if you have questions about that, please feel free to ask me, and I'm happy to explain that during the purchase process. So that's pretty much what I wanted to say about taxes. Are there any questions about that?
That's great. Thank you very much for that, Volker. That was very educational. So we've had a lot of questions which have come in already from people. So what I've tried to do is try to summarize them, though we can try and capture a lot of them today. But of course, if your question is not answered today, we will actually come back to you directly on that. So Volker, maybe I'll just go back to the slides which the questions relate to. First of all, here we have one on when you're making your payments in line with the construction period. And some people ask, how do they know that the developer has actually reached a certain part in the construction period before that money is actually paid? So maybe if you could tell us a bit more about the security there.
Well, they have to provide a written statement from either the architect or the project leader that this has actually been reached. We also have at any time the possibility to inspect the property Especially many of your properties have a webcam that is 24/7, where we can see the actual progress. And also, at the end, last not least, but the banks always require pictures of the progress. So they have to provide us some pictures for the individual progress. So we actually have, I must say, we have never had a developer actively trying to give false information there, because that would be a criminal offense. And there may be sometimes that we start a discussion with them whether this is completed or not, but that they have entirely made it up. That we have never had that situation.
Okay, that's great. The next question is on the point here in terms of the implementation of the contract. So the third bullet point down, obtaining protection in the land register before your payments. I know that this obviously means that the client's payments are very, very secure, which is not the case in other markets as it is in Germany. So Volker, maybe if you could just give us a bit more information on that.
Yeah, so the clients have two protections, alternative protections. One is that the developer provides a bank guarantee for basically them getting all monies back in case the developer would go bankrupt. Alternatively, they can the developer can give them a priority notice in the land register. Means that the land register gets a remark which says person AB has bought this property, and they will be the owner in the future, and no one can delete that remark without the buyer actually approving. Yeah, so this will stay in, so the developer cannot sell that property again. If he goes bankrupt, no one else can. So then the administrator of this possibly bankrupt developer would have to honor that contract as well.
Okay, that's great. The next question was on the property acquisition tax. In terms of, so all of the taxes that you incur when you purchase a property in Germany. But what about the exit costs? Is there any ones that people should be aware of that will come up when they actually sell their investment?
There aren't really any exit costs to speak of. The property acquisition tax is usually paid by the purchaser. So when you sell the property, then you will have the new buyer will have to pay the property acquisition tax. The same for other side costs; those also will be borne by the buyer. Then maybe you want to be represented in your sale again, as I said before, because you don't want to come to Germany. Then that would be a cost that you would have to bear yourself. You may want to look, if you're really planning on selling before, well, if you want to sell before the 10 years, then you should really look at when you make your mortgage contract, that this one allows you to end the mortgage before these 10 years, because usually they have a 10-year duration during which you have to also fulfill the contract.
Okay, that's very.
You have to pay basically not a fine, but you have to pay in compensation to the bank if you want to get out of the mortgage contract before, because the part of the interest they lose, they're entitled to claim from you, because they kind of pay the same to the German central bank.
Okay, that's great. One other question that we got actually a lot of was in terms of this one. So holding your property for 10 years so you don't pay any taxes on your profits. The question is, when does this 10-year period actually start? Is it when the client notarizes the purchase contract, or is it 1 to 2 years later when they actually get?
There's a nice mistake in the slide. I just see that. You purchase in 2020, but you sell in 2030. Sorry, not in 2020. So that's actually what's supposed to be on the right-hand side of that slide. So it's the notary appointment which matters. Yeah. So you have the notary appointment, and from that date, the 10 years are counting. Yeah, so the whole building process, the whole building period, these 1 to 2 years, they fully count into the 10 years.
Okay. Well, that's obviously great news for everybody. The sooner the better. that clock can start ticking.
It gives you don't have to sell after 10 years, but it gives you the possibility. If you sell after 30 years, it's still tax-free. Yeah, so it just gives you the possibility.
Okay. And one of the final questions then is, obviously this has been very clear in terms of the full purchase process. Has anything actually changed recently because of COVID-19 and everything that's been happening? Has anything really slowed down, or has the process been continuing largely as normal?
Mostly, I would say mostly not, yeah. We had a few developers who have problems because they're in a very late phase and they wait for very specific parts. But the one, I would say 90% or 95% of the developers don't have any problems continuing with the construction as it was planned. We have, it's a bit more difficult, was a bit more difficult to make notary appointments, was a bit more difficult to make appointments at the German embassies and consulates, yeah, because they were wary, but it seems that this is very much opening up right now. So I would say it's going, the administrative part of purchasing has gotten a bit slower. The building part, with maybe a very few exemptions, it doesn't seem to have an impact.
Okay, that's great. That's really good news. And then the final question is actually for Paul, and more from at the very start, when our clients are, when they register for, or when they reserve their property.
Yeah.
Just in terms of timing, so when they're looking at their mortgage and their lettings and management partner, is that something they need to do at the outset, or is that something that comes closer to the completion of the property?
So in terms of applying for your mortgage, we found that most lenders, and obviously there's more than one, but most lenders, the mortgage contract tends to be valid for around 2 years. So if your completion date is more than 2 years away, we wouldn't recommend applying for your mortgage until within that time frame. I would say probably most of the developments we do are around 1 year to 18 months away. So generally we'll introduce the mortgage broker at an early stage, and quite often you actually need to draw down some of the mortgage to meet the fulfillment of the purchase process. Complete for the lettings and management and tenant acquisition, we tend to do that around 6 months before. So we'll introduce you to them around that stage, and they'll sign you up at that time and go through their service proposition. So that would probably be slightly later in the piece. Everything really depends on the point of sale compared to the completion time frame. But I would say roughly 6 months for the lettings and management, and generally straight away for the mortgage broker.
Okay, so the clients will know at the outset that they have their mortgage and they have their mortgage contracts up front.
Yep.
So that's obviously gives them a huge amount of security and certainty at the outset.
Yeah, indeed.
Okay, that's excellent. So unfortunately, that's all we have time for. As I said, there was a huge amount more questions that unfortunately we can't get to today, but we will get back to you all directly on any questions which were not answered today. Thank you very much for joining, both Paul and Volker. Hopefully we can do this again very soon.
All right, thank you very much for having me.
Thanks
a lot, Volker.
Cheers.